Hi, let's talk about Orbsat. It's a company, together with its subsidiaries, provides mobile satellite services, solutions for the satellite-enabled voice, data, personal and asset tracking, machine-to-machine and Internet of Things connectivity services in the United States and also internationally. Market cap is not so big, so it has pretty huge potential in future. There's risks, as every company has less than 1 year of cash runaway, highly volatile share price over the past 3 months. Shareholders have been substantially diluted in the past year, does not have meaningful market cap, which simple Wall Street based that on the risk side. I think for those who are searching kind of ideas for the future, and for those who are young with long-term potential, so this company has it, I think. And latest share price, so it decreased through the month, so it had actually on the mid-January $23 per share of the stock, and only, so this is also illiquid, so it has like few days, could be around the same share price, so only past pretty much since the last month. So basically from the drop from the $15 per share to the $4, we can also see here. So this drop minus 73%. So pretty much this led to some of the activity on the valuation, on the volumes, and yeah, basically it's raising on the 1 day 80%. In 1 year frame we see here minus 21, and on the max side, yeah, minus 94%. Market performance: 7-day return 9%, 1 year return 56%. So yeah, this is actually from the previous trading date, so basically from the Friday's numbers. And we see here that this is long term, even worse. So 3-year return 95% on the negative side, 5-year return minus 99. So those who invested in the earlier studies, they are pretty much with zero. So this is actually the risks that every investor is taking, basically investing in the one stock. So like I said, it's better to diversify. It's even better if you don't have a lot of money to invest in multiple stocks. You could just buy a low-cost fund. It will be given right away the right diversification. And yeah, long-term price volatility considered as highest. The industry itself is lower than the average market volatility. But yeah, those numbers are not beating the industry, neither the market. Only like if you're a trader, then if you knew that it could go as far as it goes today, 80%, only that way could possibly win the industry and the market. Valuation side, so simple Wall Street, neither the tip ranks does not have any price targets currently, and Market Watch has this is actually pretty funny, $11 million. So this is pretty funny. I'm not sure where these numbers come from, but this is actually not right. So it's not calculated right. And future growth for the telecom industry that they work in, 2%. Past performance, historical annual earning growth of the company increased by 12%. And this is, we see here the dynamic of the revenue. So it increased through the years, and yeah, they had 2019 some of the decreasing based on previous years, but now It's, I think, even less. No, it's actually a little bit more, 500k more. But as we can see from the downside on the earnings side, this have been, yeah, pretty volatile. So the company had better years and not so good years. Currently the company is unprofitable. Financial health side says, yeah, so this is getting serious and serious. Equity is decreasing every year, and yeah, they had this one kind of movement here where the equity is not covering the level of debt, and debt to equity ratio is currently 136%, and they do not have even cash to cover the debt. So 559k of the cash, debt 787k, equity 576. It's actually a serious situation going on, but not so critical as I usually dramatizing here. Balance sheet looks green, but here's the debt, so keep in mind the company does not pay dividends, and also on the insider trading volumes, so we don't see here the actual insider transactions through the 1 year frame. Ownership breakdown: general public 77%, private companies 15, insiders less than 6, institutions 0.8. And on the top shareholders, we see mostly are red, mostly are decreasing. Only Shapiro Consulting increased 43%. That was 9th of March, so let's have a look. Yeah, but I'm not sure where they decreased, for example, here or not, so this is information that we can find now. And also on the Finviz, so we see here kind of odd things. This shows that the price were at around 112. This kind of movements, I'm not sure where they come from. But anyway, simple safe dividends showing that shares outstanding keep significantly increasing. Total sales are on the same level pretty much than the few previous years. But I think this increasing of the shares outstanding could possibly be the reason why this is decreasing all the time. And investing.com summarizing the stock for long-term investors as a buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.